How's everybody doing? Hope everybody's having a great week, great day. All right, after rolling off the market maker model video, I wanted to make a simple manipulation model almost. All right, not mine, but I wanted to go over a simple manipulation model. All right, and that's the kiss of death model. Very simple and easy to understand, and it's the key to understanding manipulation. If you can understand the obvious manipulation within a market maker model, you can easily run the market, all right, just off the market maker models and the manipulation. What you want to keep in mind that of course time is always fractal within your within your large high time frame turtle soup. There are low time frame turtle soups, and the kiss of death refers to the final manipulation leg into a turtle soup before a high time frame draw on liquidity is met. All right, the key components are very close to your obvious draw on liquidity: a lower time frame liquidity pole, an obvious market profile, and specific time candle profiles, such as the 9 a.m. 4-hour candle, right? 9:10 a.m. 4-hour candle, as well as your London 2-3 a.m. 4-hour candle. Our subordinating components, right, are accumulation, manipulation, and distribution. We'll see how the kiss of death refers to the manipulation leg of the AMD profile, right? We want to keep in mind, are we in a price premium or discount and a time premium or discount? Okay, with this model, we're also going to be probing order flow. All right, kind of a big word, doesn't really mean too much. It just means if we're trending bullish, we're breaking highs, respecting lows, right? Making higher highs and higher lows. We're respecting bullish PDAs, disrespecting bearish PDAs. All right, down close candles are providing us support. All right, and if we're trending bearish, we're breaking those lows, rejecting the highs. We have lower highs with lower lows, right? Respecting bearish PD arrays, disrespecting bullish PD arrays. All right, our up close candles are providing resistance. All right, and then another key factor, which is evident that you look on your own chart, and a very key factor in you understanding, right, topics like this, is going on your own chart and seeing, do we have an SMT, do we not have an SMT? All right, we'll keep all of this in mind, keep all of our market maker models in mind, as well as the key to understanding turtle soup, right? We'll keep that in mind while we go over all of this in one model called the kiss of death. Coming into the case study, we see a 1-hour market maker model, right? With our PDA being a 4-hour order block and a daily fair value gap. We see that we have, right, left low resistant highs as well as closed above 50% of this rejection block S candle, right? I don't see it as a rejection block because I think this is, right, this was not maybe all-time highs, but, or no, it was. Right, so we know order flow is bearish, right? We have a obvious order block into an obvious fair value gap here. Down to our 1 hour, we have now left and displaced lower and left a fair value gap. Okay? Coming into Wednesday PM session into our close, we see that we have left, right, what is not seen as a 4-hour rejection block now, but what I will see as a rejection block as we break this high. Right, we've created a range, CSID. We get a retracement, all right, for our turtle soup buy, long. So now we're searching for this high, then to start accumulate after this high. Okay. We now have a breaker. Did we leave any fair value gaps below? No. So I can't really say that we have any breakaway gaps, but we do have a fair value gap left wide open. We start to have an accumulation range coming in to Friday, the London session. We have an accumulation, lower time frame accumulation and higher time frame accumulation. All right, got to come a bit farther. Right, and one thing we see here, right, we have a accumulation, with our smart money reversal. We're now on our second leg accumulation. Right, straight into our breaker, right into the AM session. And I think this is our 8 a.m. candle, which means it's pre-market news. So a news manipulation driver after an accumulation, an overnight accumulation into our Wednesday low of week profile. Right? So now we have Monday's liquidity resting. So what's more likely? The Monday high of week or the Friday high of week? Just with your weekly profiles, you can ask yourself that. And then looking at the chart, you can see that we now have accumulated but not manipulated higher. So it would make no sense to continue lower. All right? This is our kiss of death. It is the final goodbye before we run to our final distribution leg and run to our original accumulation highs, right? And run through all the low resistance liquidity. With this here. And we see even on this Tuesday into the open and through the whole day Tuesday, right? We have a manipulation into our rejection block, into our kiss of death order block, right into EQ. We wick in, close within our rejection block, right? And then continue to finish off our market maker model higher. Found a beautiful back-to-back example here for you, right? We have our original 1 hour accumulation, all right, distribution, all right, sweep this high into a PDE array with our smart money reversal. Now we go to finish out our curve. We have our accumulation, right? Accumulation, manipulation, distribution, right? Into a small accumulation, into our 8 a.m. candle, right? To our 9, 10 a.m. range, right? And have our final kiss of death manipulation up into the breaker, right? To then continue us past our original accumulation low. So we have that kiss of death. Then we have this beautiful kiss of death with our accumulation, right? With lunch liquidity resting below with our higher time frame order block. We've now created a high time frame, CISD, right here. Right, so we want to fade this fair value gap, sweep the lows into the order block. 1, 2, 3 candle. We now have our rejection block candle, right? And what time are we coming into? Our 9-10 a.m. range. We wick in, close within. Have our kiss of death, right? Our final manipulation leg before we continue out with our market maker model. And technically, this is our real kiss of death because we create a breaker, we accumulate coming into the 9-10 a.m. session, right? And I know, man, with this one, if you guys can't see how I trade, like, guys, look at that, right? 9 a.m., 8, 9, 10 a.m. candle. Look at the 4-hour breaker. I mean, Jesus Christ. Come on, guys. Right. This is taking candy from a baby. We're taking candy from a baby here, guys. It's back to back, right? You have a CISD model, your kiss of death model. I mean, damn, you're even your rejection block model all within one. And I haven't even got to those, but it's taking candy from a baby. It's taking candy from a baby. Right? Even if you get stopped out, you have a 3 to 5 RR. You just don't do nothing stupid, right? And you just roll with your market maker models and your turtle soup. And you live life and you chill. It's really not that. It's so simple, guys. I mean, you can see it here, guys. And I'm not even bullshitting. I send this every day in chat in the analysis. Like you got, like, man, you guys can see it. It's so easy, right? And I say easy, but my psychology kills me. It's obviously dealing with money, so that's what makes it hard, right? But if you guys join my Discord, see the analysis, you'll see this happening every day. Every day, every 15, 30 minutes, right? Every lunch or every like time-based liquidity session into our New York or London, or right, if it's the time for it to do it, it's going to do it. We also seen our long wick get filled to and through there, right? Not this one though, because of order flow and this low being protected. Why is this low being protected? Right? If I'm not even going to explain. All right, no, I will, because I got to remember. Right, obviously, we sweep these internal lows into the fair value gap BPR, right, after creating a breaker. This breaker leaves this fair value gap open, right, with this protected low to continue higher. The low is still protected because after we sweep this low, right, we engineer more liquidity with this weak little low, then deliver, right? This is tripping everybody out, right? Because you sweep the low and it's like, oh, it's going to break lower. It should break lower to this low, right? But then we fake everybody out, and now everybody's past this high, and we're like, oh, it should go to these highs, right? But we have this fair value gap and PD array that we return to, then sweep, and they're like, oh, now we're going for this low, right? You can see how it's easily a trap and how you can easily be on the right side of it. All right, I'm going to go over the notes one more time, but honestly, I'm going to leave it at this. If it's not a long video, it doesn't need to be, because this just speaks for itself. Alrighty, pretty simple. Kiss of death. It's our manipulation model. The key to understanding manipulation. Right, we saw how time is fractal, and within our higher time frame, turtle soup delivering us higher, we have our lower time frame, right? Within our 4-hour, we have our 1-hour turtle soups, right? And we saw how the kiss of death refers to that final manipulation leg. And even, I actually got it wrong, right? There was one turtle soup that we had, and then we had another manipulation leg right after it at the same time-based period, just days apart, right? Weekly profile, we're going to continue higher, right? We're just manipulating to trap everybody. All right, you saw it back to back, and then right, even market maker model back to market maker model, right? We had the buy side, then finished out with the sell side, and then that sell side was used as the new sell side to our buy side curve. Okay, we saw how we were very close to our draws on liquidity for the kiss of death model, right? And obviously, even though we're very close to our draw on liquidity, we were delivering from a higher time frame turtle soup, right? And we were entering on our low time frame turtle soup right before our final draw on liquidity. All right, we've seen our lower time frame liquidity pools and obvious fair value gaps. All right, we saw the market profile we're delivering from, as well as what specific time candle profiles we were looking for. All right, we went over the AMD of it, the accumulation, manipulation, which is the kiss of death, into the distribution, our price and time premium discounts. All right, we went over how we're probing order flow, just simply looking at the screen and seeing what highs are being broken, what lows are being broken, and not, in a fake way. Right at the end there, we showed how it's trapping everybody, right? And you got to see what PD areas you're delivering from, right? Higher time frame to get a good overall understanding of order flow and draw on liquidity. All right, can't really go over SMTs. All right, that's for your doing to do, right? Or for your willingness to do. If you want to, you can. If you don't want to, don't get better. All right. I want to appreciate everybody for the love I've been getting recently. All right, almost 200 subscribers. Right, there's like 3,000 views on the channel. I'm doing my best to get y'all the best videos I can, and there's still, just a shit ton that I could just drop on here, and all of it's known, right? It's just so much of it, and it does take a lot of work, and I see why people do the paid stuff. Like, shit, it's a fuck ton of work, but I'm willing to do it, throw this stuff out here, because right, without it, I wouldn't be where I'm at. And not that I'm anywhere, but I'm a lot farther, and I can say confidently than I was even a couple months ago, right? Year's time last year, it's not even comparable, right? And you just gotta lock in chart time, right? Get an understanding, study, and just do it over and over and over again. All right. Thanks for watching. Be safe. Y'all have a good one.